The U.S. stock market is currently closed for the weekend, but the story for Reddit Inc., ticker RDDT, is all anyone on Wall Street is talking about. At the closing bell on Friday, October 31, 2025, the stock finished at a staggering $229.41 per share. That was a gain of $34.83, or an explosive 17.90% in a single session, a move that vaporized short sellers and forced a complete reevaluation of the company. Now, the immediate hook, the thing that most people believe is driving this, is the AI narrative, the idea that Reddit is a goldmine for data licensing. But here's the reality that the market is just now digesting. That's not the real story. The truth, buried just one layer deep in their blowout third quarter earnings report, is that the data licensing business is, for now, a tiny piece of the puzzle. The real engine that just ignited is Reddit's core advertising business, which surged an astonishing 74% year over year. The market came looking for an AI lottery ticket and discovered a hyper-growth, profitable advertising machine instead. Let's set the stage, because this tension between what we thought Reddit was and what it's proving to be is everything. The common belief, the narrative that has surrounded RDDT since its IPO, was that this was a perpetually unprofitable, chaotic social hub. It was the front page of the internet, yes, but one that was impossible to monetize effectively. The expectation was that its user base was fickle, its volunteer moderators were a constant risk, and its ad platform was leagues behind the professional tools of Meta or Google. The only real hope, the story went, was that it could sell its massive archive of human conversation to AI companies. That was the bull case. But the reality, delivered with a shockwave on Thursday afternoon, is that this entire narrative was wrong. The company just posted $163 million in net income, not adjusted, not on a good day, but actual GAAP profitability. It generated $585 million in revenue, crushing estimates. It guided for another massive beat in the fourth quarter. The reality is that while Wall Street was obsessing over the AI side hustle, Reddit's main business quietly became a powerhouse. Now, let's break down the recent stock movement, because that 18% Friday spike was a sight to behold. This wasn't a slow and steady climb like you'd see in Apple stock. This was a violent, decisive re-rating. The earnings dropped after the bell on Thursday, and pre-market trading on Friday told you all you needed to know. The stock gapped up and it never looked back. The volume was immense, indicating that this wasn't just retail traders on the Robinhood app piling in, though they were certainly a factor, using their Robinhood stock trading accounts to chase the momentum. This was institutional activity. You can be sure that major funds using sophisticated Fidelity trading platform tools and interactive brokers were absorbing massive blocks of shares. This move blew the stock clean through every analyst price target that existed on Wednesday. The consensus target was sitting around $213, and the stock closed $16 higher than that. This is what is known as price discovery. The old analysis is useless, and the market is now desperately trying to figure out what the new fair value is. This is a very different beast from the high-flying but narrative-driven swings of Tesla stock or the cyclical semiconductor story of Nvidia stock. This was a fundamental shift. This move has massive implications for all types of online investing. For the active trader, perhaps using SoFi Invest or a Fidelity brokerage account for their self-investing, the volatility is an opportunity. For the long-term holder, maybe someone whose investment is parked in Fidelity mutual funds or an intelligent portfolio structure like Schwab Intelligent Portfolios, this report forces a new calculation. This isn't just a speculative social media play anymore. This is a company with a 91% gross margin, $236 million in quarterly adjusted EBITDA, and a clear path to continued growth. The investment help you would have gotten on Wednesday is irrelevant today. The company beat its own IPO profitability target, a goal it set just last year, and it did so with a 40% adjusted EBITDA margin. That is elite-tier performance. So, what does Reddit actually do to make this happen? We all know the platform, a vast collection of communities, or subreddits, covering every topic imaginable. For years, its main source of income has been advertising, but it was always clumsy. The ads weren't well targeted, and advertisers were wary of their brand appearing next to a controversial thread. The expectation was that this would never be fixed. The reality is that they are fixing it. And fast. The Q3 report showed a 75% increase in active advertisers. Why? Because Reddit has been pouring resources into its own AI and machine learning to improve its ad platform. They're getting better at targeting, better at conversions, and better at proving returns to advertisers. This 74% ad revenue to $549 million is the fruit of that labor. It's finally working. Then there is the other revenue category. This is where the headline-grabbing AI data licensing deals like the one with Google are booked. The expectation was that this would be a massive number. The reality? It was $36 million. That's up only 7% year over year. It's almost nothing compared to the ad business. This is the crucial insight. The AI data narrative is a fantastic story, but it's not the business. The business is advertising. The data deals are just the icing on the cake. This is fantastic news. Why? Because the ad market is a multi-$100 billion arena that Reddit is just now proving it can seriously compete in. The data licensing world is new, undefined, and fraught with regulatory risk. The market thought it was buying a speculative asset and found out it owns a high-growth advertising business. That's a trade anyone would take. So, what is the future outlook from here? The first and the most obvious catalyst is the continued scaling of this ad business. Management's Q4 guidance of $655 to $665 million in revenue was once again far ahead of expectations. This implies they have strong visibility and are confident this 70+% ad growth isn't a one-off fluke. They're improving their SoFi active investing style ad tools and making it easier for advertisers to get on the platform, which creates a flywheel of growth. The second major catalyst is international expansion. In the Q3 report, international daily active users grew 31%, blowing away the 7% growth in the more saturated US market. This is a massive, untapped frontier for both user growth and ad monetization. Many of those users in new markets are not even being fully monetized yet, which represents a huge untapped reserve of future revenue. This is the kind of long-term story that gets Fidelity wealth management planners interested for their clients' Fidelity IRAs.